most Singaporeans investing their SRS in the S&P 500 are handing 30% of every dividend straight to the US government. And they have no idea that it's happening. Today, I'm walking through every S&P 500 option available for your SRS, including the one I would pick if I was starting from scratch today. But as a viewer, I want you to understand that SRS is already a tax-saving account. The whole point is to keep more of your money. So the fund you put inside it matters. Whether it's the fees or the tax drag, they will compound over the decades. So in today's video, I'm going to introduce 3 options on the table, going from the worst to the best. And the truth is, I started with the worst one myself, so there's no judgment, okay? I start from the worst, and then I will present you the best at the last, okay? And if you're new here, my name is Chris, an ex-chartered accountant, and I run a Telegram group of close to 23,000 members, but really go and join my Instagram because I only have 4,000 people. So go and follow my Instagram at honeymoneysg. Now, let's talk about the default basic, which is ticker S27, the Spider S&P 500 ETF listed in the Singapore Stock Exchange. The S27 is the most accessible option and available on any Singapore brokerage that have access to SGX. And that's the only thing it has going for it, because there are a lot of problems with this ETF. And in order of paid, number 1, expense ratio 0.945%. It's not terrible, but it's really not the cheapest. Okay, there are much cheaper ways. Number 2 is denominated and traded in USD. So we know that you all are holding SGD cash, right? So if you want to buy USD tickers, you will need to convert from SGD to USD. So you're dealing with FX spread on every transaction, even though you're buying on SGX. Remember that even though it's listed in SGX doesn't mean it's listed in SGD. Number 3, domiciled in the US despite being SGX listed. A lot of people has this misinformation. They think listed in SGX means SG domicile, but no, it's domiciled in the US. And this matters for what comes next, which is 30% dividend withholding tax, because it is US domicile. Anything that's US domicile, when it pays you dividends, you will need to suffer 30%, which will pay back to the US tax department. It is full 30%, not 15% like the UCITS ETF Ireland domiciled funds. And the most important thing is the US estate tax exposure, because non-US persons holding US domiciled assets above $60,000 are technically exposed, and this S27 will qualify for it. Even though you are buying it from Singapore, it's listed in Singapore, but as long as US domiciled, you will suffer the estate tax when you pass away. So I started investing in S&P 500 ETF with S27 in the year of 2022. If some of you remember this video, I actually outlined the steps on how to invest in S&P 500 using the POEMS platform. And back then, the options were really limited. This is the honest truth. But today, there's really no more reason to use S27 for SRS if you want to invest in S&P 500 anymore. So let's move on to what's the next best alternative, which brings us to the second option, Amundi Prime USA fund. This is a unit trust that tracks the US large and mid cap index. And to be clear, it is very similar exposure to S&P 500, but it is not exactly the S&P 500. It just tracks the similar companies within the US market. Okay, so don't say Amundi is S&P 500. Okay, it is not. But it tracks the similar companies like Apple, Microsoft, Nvidia, Google, all these you all know. Okay, the expense ratio of Amundi Prime USA Trust is 0.05%. So it's very competitive. And there are 2 ways to access this unit trust that I always mention on my channel. Number 1, Endowus. If you want a user-friendly platform, okay, just go through Endowus, sign up for an account. You will pay 0.3% management fee on top of whatever the fund is charging you. That's for them to manage the fund for you. Okay, but I myself, I will go through POEMS, right? Because you can also buy this fund on POEMS with no platform fees, no sales charge, okay? And you don't pay that 0.3%. So POEMS wins on cost, absolutely. And I know some of you are going to ask, what's the difference between Endowus and POEMS? This one I already gone through in multiple videos already. If you want simple platform, if you want easy to use, if you like all these performance metrics, you go Endowus. But if you really don't fancy all this, you just want to save cost, you just go POEMS. No right or wrong. I have referral links for both. I'm not sponsored by any of them. So you just choose what you like, okay? But let's go through a bit. How does unit trust pricing works? Because a lot of you are familiar with ETF because it's traded in the market time. But unit trust is quite different because at the end of the day, there's only one net asset value, NAV price. Okay, every order will be filled on the same price, whether you buy or sell. There's only one price at the end of the day. We call that NAV. There's no bidding price or asking price. There's no bid-ask spread. Like for an ETF, right? Sometimes there's a low bid and a high ask. So in between, we call that the bid-ask spread. That's for ETF because it's traded actively in the market. But unit trust, there's only one price at the end of the day. So there's simple execution, and it's confirmed to execute because everyone will trade at the same price. Another thing about Amundi Prime USA fund is that it's denominated in SGD. Okay, it is not in USD. But I want to clear the misconception. Doesn't mean it's SGD means you have no currency risk. Okay, the underlying companies in the Amundi Prime USA index is still USD dominated, which means they get their revenue, their business, their markets, they all collect the revenue in USD. It's just that when they present this fund NAV to you, it's translated to SGD. So it doesn't mean that this fund is denominated in SGD means there's no currency risk. No, okay, it doesn't eliminate the FX risk because this one is also unhedged. Means it will suffer some FX conversion, just that it's not seen by you. But what is good about this Amundi unit trust is that there is not going to be any US estate tax. Why? Because it's not domiciled in US, it is domiciled in Luxembourg. So it's clean on that front. Now, let's go on to the more popular question, the withholding tax. Okay, this one people usually get wrong. Even though it's Luxembourg domiciled and it's a unit trust, it is not a UCITS ETF, not an Ireland domiciled UCITS ETF. So Luxembourg unit trusts do not benefit from the US-Ireland tax treaty that gives UCITS ETFs their 15% dividend withholding tax rate. And I've confirmed this multiple times directly with Endowus. They have confirmed that it is 30% withholding tax, not 15%. So it is cheaper fees than S27 on expense ratio. There is no estate tax, it is SGD denominated, but really the Amundi Prime USA fund will suffer the same dividend tax drag as S27 because they both have 30% dividend withholding tax. Now let's talk about my current SRS position with POEMS for S&P 500 exposure is with Amundi Prime USA. And this is my exact portfolio. I have around close to $60,000 sitting down there in SGD. It was a good option back then when I moved to POEMS platform. It is still reasonable. But I feel that as of today, the day of recording, it is not the most optimized way. If you want to be exposed to US large and mid-cap companies or the S&P 500, I have a better solution. Which brings me to CSPX on StashAway ETF Explorer. So I mentioned about StashAway ETF Explorer multiple times on this channel, and in the past, I always talk about the S&P 500 exposure. The ETF underlying was IVD, which was US domiciled. Okay, so it was not really recommended. But recently, I think a few months ago, StashAway ETF Explorer has released CSPX. And for those of you who are familiar with S&P 500 investing, you will know that CSPX is a Ireland domiciled UCITS ETF. So here are some pros of this ETF. It is 0.07% expense ratio, relatively cheap, and with its Ireland domiciled UCITS ETF status, that means 15% dividend withholding tax, not 30%, and no estate tax. So very good. Both ways also win, whether on estate tax or dividend withholding tax. So this is the closest SRS option on what you will buy with cash in a brokerage account. So it's exactly the same ETF. Some people, they use cash, they invest in S&P 500, they will buy CSPX. So now, glad to know that you can use your SRS to invest in CSPX as well. But all pros, meh? No cons? Let's look at some cons. Now, StashAway has transparently mentioned on their website that there's an FX spread that charges 0.32% per order. Okay, that means that if you deposit SRS in SGD, because you cannot deposit SRS in USD, right? They will convert for you the SGD to USD at StashAway FX rates, which charges a 0.32% spread. And there's a sale charge of $1 per order, but that can be negated by regular investing advantage, which is a feature of StashAway ETF Explorer. That means that if you invest in the same portfolio next month, you will not incur any trading fees, essentially zero fees. So they are encouraging you to do dollar cost average every month. So currently, for my SRS portfolio, I'm using StashAway ETF Explorer for global equity, not S&P 500, global equity. So it's very different. I'm just sharing that S&P 500 ETF of CSPX is available as an option on SRS investing, and you can try out StashAway ETF Explorer. So quick recap of the 3 funds or ETFs that you can invest using your SRS for S&P 500 exposure. Number 1, S27, listed in SG. Very accessible, but US domiciled, 30% withholding tax. There's estate tax risk and it's no longer my recommendation. No. Okay. Number 2, Amundi Prime USA on POEMS. Zero platform fee, no estate tax. SGD denominated, but still 30% dividend withholding tax. So this is reasonable if you just want simplicity and zero platform cost. And number 3, which is my recommendation, CSPX on StashAway ETF Explorer. Based on the cost basis of lower dividend withholding tax, 15%, Ireland domiciled, no estate tax, most tax efficient, small FX and transaction costs, but it's still worth it in the long term because it has the lowest tax drag. So if you forgot everything I just said, don't worry, I'll put everything in a cheat sheet. You can download it for free on my coffee shop. Okay, no need to pay me. Okay, just help me scan the IBKR QR code or just sign up for any of the platforms if it helps you. So to summarize my SRS portfolio, I have a Amundi Prime USA fund on POEMS platform. I also have Global Equities ISEC ETF on the StashAway ETF Explorer platform. So 2 platforms, okay? So if I start today and I want to focus on S&P 500, I will definitely choose CSPX for all the tax and fee advantages. Definitely no to S27 anymore. Now, what I presented in this video is just a very objective analysis. Of course, you may have your own preference, especially if you have preferences for platform user interface or platform user experience. You really don't like a certain platform or you don't believe in their founders or their company. Yeah, it's really up to you. You just choose the best platform and the best product available on that platform. Because it's not financial advice, I'm just telling you what are the options and presenting to you the facts, alright? Also, this video is not sponsored, so I cannot be biased to anyone, right? Yeah, so if it really helped you, just help me click a like, subscribe, share this video to your friends and family if it helped. And if you want to check out my SRS guide for beginner, you don't even know what the SRS is about, then I'll really recommend you to watch this video, the SRS guide for beginners right here.